still some skepticism in the markets. For more on this deal and also Ireland's debt downgrade and what it all means for the markets in the euro, I want to bring in the head of global foreign exchange for strategy for RBS Securities, Bob Sinche. Bob, good to have you on the phone. What do you make of this debt mechanism to take place in 2013?
Well, we're inching along the road, potentially to an eventual solution. But again, this is nothing that where the authorities are getting in front of the markets, and I think that's been the problem all year long. Is that there'll be a crisis, there'll be at least a temporary solution, another crisis, another solution. But in terms of grand plans and a real a plan getting ahead of future issues, we really haven't seen that yet. So I think the markets remain understandably skeptical.
So what would they need to do to get ahead, Bob?
Well, I mean, this is a political issue, and you know, clearly Germany is at the middle of all this, and do not want to cave in on a lot of their you know, internal views and beliefs. Is a big political issue within Germany. Mm-hmm. So I think the ability to get in front of it is something the markets really aren't all that afraid of. Mm.
Well, but Bob, I mean, what could be the scenarios that you could envision after this? Are we talking about a closer fiscal union? Are we talking about further debt restructuring, or even the breakup of the euro?
Well, I think most people think breakup of the euro is not an option. So you get into one of the previous options. I think longer term, we're probably going to have to come to some sort of closer fiscal union eventually. But you know, whether that happens in a year's time or in 2013 or even later is not clear, and that's the vacuum that markets really don't react well to.
No, they don't react well to at all. And what do you make then of the reaction that we're getting right now to this announcement from the European leaders, where the euro has basically given back all of those gains?
Yeah, I think that there's an immediate reaction when the announcement was made. These are relatively thinning year-end markets, but again, I think once you look into the details, there's nothing really here in the short run, nothing that's immediately going to drive any renewed enthusiasm for the euro or narrowing of rate spreads within Europe. So more of the same, and euro's kind of settling into a range now. It looks like heading into year-end right here in the 130, 135 zone.
Right. Then, Bob, what do you make of the downgrades that we saw then from Ireland, and also the negative sentiment on Greece?
Well, I mean, I can't think that comes as a shock to anybody. I mean, the rating agencies have not really been in front of this the whole time. So, you know, I think that's a bit of older news. And again, I think the newer news is what's going on within the within the EU Commission and these decisions about longer-term policies. And again, that was kind of a bit of a stalemate, a little bit of progress, but nothing really definitive.
And Bob, in your view, what's the currency that looks most attractive or stable to you now?
Well, you know, the Asian currencies still stand out for 2011 environment. Although I think right now it's again really very quiet markets. We're not seeing much activity at all. So I think I think we're not going to see anybody really standing out here in terms of performance in the next few weeks.
Bob, I appreciate you joining us. Thanks so much. Bob Sinche from RBS Securities on the phone.